You're welcome here. So we're going to continue with our read with me today from where we stopped last time. The last chapter, we finished chapter one in our previous video, and it lasted 1 minute. We were able to read at least 29 pages from us something. So the last video was supposed to be 2 hours long, but because of the background noise, and when I later played the video and listened to it, I see that the background noise did not reflect that much. So we're just going to continue from where we left off. So we start chapter two today, and we'll continue from there. Thank you very much. You are welcome here. So in this chapter, we learning divining mental strength, aiming for self-analysis instead of market analysis. Okay, that's a good thing in the market. We are to be aiming for self-analysis instead of market analysis because one way or the other, we do market analysis. And from my experience, I've discovered that even market analysis, depending on the pair you are even trading, within 3 minutes, you would have known maybe you want to buy or you want to sell. Explaining it to people is why we take a longer period of time. Because if I easily look at weekly, monthly, I mean, a monthly, weekly, and daily, I already see my structure. I see my daily range from daily. I mark my PDA arrays, premium and discount arrays. I already have where to be buying from and where to be selling from my PDRs. I know where to be looking for buy on 4 hour or on lower time frame. And all these things can be done within 3 minutes. If you already know, you don't even need to mark and mark and mark and mark before you know. Just mark your PDRs where you are expecting price to be. So I guess that statement of aiming for self-analysis instead of market analysis, we're going to see that moving step by step toward your goal and dealing with stress. Obviously, in fact, I really need this because missing general life stress with trading stress. And oftentimes trading is no longer stressing me because I already know what I want to do and what I'm expecting from the market. So I don't have that much something. But dealing with stress generally, one way or the other, market will not do what you expect it to do. And we all have expectations, even though we are supposed to limit our expectations. We do have expectations. So, but nonetheless, we're going to we're going to learn that from here too. And building mental resilience. I guess this something is going to serve us well. I guess rest. So chapter two, developing mental strength. And traders report that one of the biggest problems they encounter is a lack of discipline. Okay, one of the biggest problem we encounter as a trader is lack of discipline, and that's true in the sense that in the sense that normally as a businessman we have some discipline in place, but you see that dealing with forex is different and it requires some new set of discipline. In business, there's a way you can negotiate your way out of any situation, but there is no way you can trade yourself out of any position except you either accept the win or accept the losses. So then getting discipline to that level is something that is, in fact, I will come, sorry. So traders report that one of the biggest problems they encounter is lack of discipline. They note that this lack of discipline sometimes leads to loss of control as well as avoidable errors in the preparation and execution of trades. The truth is, what they lack is mental strength necessary for trading business. Like I said, there are disciplines on ground before we come to trading. But the truth is, what they lack is the mental strength necessary for the trading business. Motivation is no substitute for discipline. Okay? Because as it is, that's a very massive statement from there. The truth is, what they lack is mental strength necessary for trading business. We lack mental strength for trading business. Motivation is no substitute for discipline, and that's true. You can be motivated to do something. If you are not disciplined, there's no way you're going to kind of like succeed in doing that. So The development of mental strength. The focus of this chapter is development of mental strength. The development of mental strength is an essential prerequisite for your success in trading. The development of mental strength. We've got to develop mental strength. And that's the truth. Massive mental strength for that matter. Pardon me. Massive mental strength. That development begins with the mental preparation of each trading day. Okay. Each trading day, a positive mindset promotes self-discipline. A positive mindset promotes self-discipline and allows us to focus on the success parameters of our trading strategies. So that means we've got to have a positive mindset that will promote our something. In this way, you continually learn and develop positive mindset. So that means regardless of whatever we are facing, we still go to hold on to the positive side of the something. Okay. So in this way, you continually learn and develop, which is always your own best strategy for avoiding stress and lessening emotional periods. Mental strength and stress resilience. Mental strength and stress resilience are mutually dependent. In the face of incalculable and volatile markets, you need a good portion of mental resilience. Okay. So preparing the mind. How do you prepare for a typical trading day? How do you prepare for a typical trading day? Do you prepare for a typical trading day? You probably invest a lot of time in the analysis of fundamental data, market indicators, and charts. You read studies and carefully view the daily flood of news on various channels. We follow one or two experts and include their market assessment when you prepare your trading plans. Viewed from the psychological point of view, these efforts serve to reduce the extent of uncertainty, okay, and give you a feeling of control. This creates self-confidence in a market environment that is always hard to predict. Therefore, some traders put a considerable amount of effort into market analysis. This typical trading day that this guy described here, I don't fit into it because normally I don't feed myself with daily flood of news on various channels. I don't read any study at all because all the thing we are trying to avoid with all this analysis, reading this, trying to hear this, trying to hear that, is losses, and we're going to have it, either we like it or not. So losses are part of the market. So I don't get myself involved in all these things. I don't invest a lot of time in analysis of fundamental data or market indicator. I only deal with charts. I look at charts, look at psychological levels, which are support and resistance levels. I look at those, pick my trade. One way or the other, is either going to be a win or loss. No matter the kind of analysis you invest yourself in, either fundamental, sentimental, or technical analysis, you are still going to have a loss. That's the reason why psychological analysis is the best. At least I've learned that. Maybe a lot of people might still be doing this just to avoid losses, but to me, I see them like they are trying to avoid losses, which is something you can't avoid. And view from the psychological point of view, these efforts serve to reduce the extent of uncertainty and give you a feeling of control. Whew. So this creates self-confidence in a market environment that is always hard to predict. Therefore, some traders put a considerable amount of effort into market analysis. So searching for holy grail. Let's be honest. All traders are secretly looking for the perfect strategy. And I guess that's true anyway. That's very, very true. That's very true. Come on. Let's be honest. All traders are secretly looking for the perfect strategy. The much cited Holy Grail. And that's true. In fact, personally, I have very good strategy and I thank God for it. At the same time, I'm working on it, even though I'm yet to kind of I know within myself that my strategy is going to pay me. But at the same time, secretly, I'm still looking for that. I'm still looking for a way to learn more about markets, kind of finding a way. There was this time last year around October, November, December. I found this strategy on 5 minutes. Come on, it was so perfect. I was in drawdown then, but within 2 weeks, this strategy brings me out of drawdown, and I was moving closer to profits. But before you know it, then the strategy begins to fail. Come on. So it's true. All of us are looking for that, the dream of guaranteed success on stock exchange, in other words. So guaranteed success. We are looking for it. And that's true. That this is a massive confrontation, I guess. It's a very, very massive confrontation. We are looking for that, secretly looking for that perfect strategy that will be using, that will not fail us. Hmm. We are all looking for this thing. Secretly, secretly, secretly. We are looking for that strategy. Hmm. Searching for holy grail. Let's continue. Let's be honest. All traders are secretly looking for the perfect strategy, the much cited holy grail, the dream of guaranteed success on the stock exchange. In other words, that's why traders invest so much energy into sophisticated forecasting models and complicated calculation models. And that is true. There's no lie about this thing. And if you yourself if you are going to attest to the facts also, still the same thing. So technical stuffs. The Holy Grail strategy originated in the United States with Linda Bradford Rashke, known the world over as one of the best commodities and future traders. Known as known the world over, okay, as one of the best commodity and future traders. Talking about Linda Bradford here. Originated in the United, okay, the Holy Grail. Okay, in the mid 1990s, she developed a set of trading setups, strategies that were supposed to predict the optimum entry point during clear trend movements to maximize profits and minimize risks. The defined trading signal was supposed to enable an optimum risk-reward ratio. This classic trend following system, however, requires stable trends to work. They lose their halo in volatile sideways markets. According to the Arthurian legend, the original Holy Grail disappeared and its secrets were never discovered. In the trading world, the search for the Grail continues unabated. It is a wasteful goal, in my humble opinion. Okay, we learn about the origin of Holy Grail and the expectation, but the failure of the first Holy Grail by Linda Bradford made us to continue to look for that Holy Grail that was never found in the first place. In retrospect, in retrospect, the Holy Grail has achieved notoriety by way of its name rather than its track record for producing profitable trading strategies. But that doesn't mean that Linda Raskell Holy Grail strategy doesn't deserve a closer look. In my opinion, a legendary trading approach provides true valuable fundamental principles that are worth remembering for newbies as well as experienced traders. Insisting on consistent risk minimization and loss limitation with every single trade. Insisting on consistent risk minimization and loss limitation with every single trade. Developing systematic and structured trading process. Okay. Opening a trade only if it has clearly identifiable charts patterns. Okay. So these are the three underlying principles of the Holy Grail of Linda Bradford. Seeing why a market analysis isn't sufficient. Okay. Why would I even suggest that an in-depth analysis of the market isn't sufficient for success? The answer is quite simple. Because the human factor comes into play on the stock market. The trader's psyche is the weak link in the process chain. Okay, our psyche is the weak link. Technical and fundamental preparation is just as important as mental preparation for what happens on the market. Your mental constitution and your attitude determine whether you will benefit from your technical expertise. Okay. Technical and fundamental preparation is just as important as mental preparation for what happens on the market. Full stop. Your mental constitution and our attitude determine whether we will benefit from technical expertise. What is constituted in our brain, in our mental side of us, will constitute, will determine whether we will benefit from our technical expertise. Experience shows that it is much harder to implement a tested strategy according to the rules, okay, than it is to find a new profitable strategy. Oh, experience shows that it is much harder to implement a tested strategy according to the rules than it is to find a new profitable strategy. So, a new profitable strategy finding is thrilling, apart from the fact that unfortunately there are no perfect, consistently profitable strategies. Okay, it is a fact that there is no perfect, consistently profitable strategies. Okay, that's one. Number two is here is telling us that it is harder to implement a tested strategy according to the rules. I have my own strategy now, and there are rules that comes with it. So for me to implement that rules, this place is suggesting the fact that it is easier for me. I mean, it is easier to find a new profitable strategy than implementing the ones I have with rules. Okay, that's something. Warning, don't allow yourself to be fooled by the dubious promises of some self-appointed experts. Guaranteed dream return with my XYZ system remains a pipe dream and serves only one purpose: to extract money from your pocket. Okay, I guess by now we are in 2026. We should be wiser than when we were before 2020. Doing self-analysis instead of market analysis. I guess we are learning. This place is telling us about self-analysis is as much as it's much important as fundamental and technical analysis that we do. We have to be doing mental analysis. So doing self-analysis instead of market analysis. Okay. What is the what is the correct procedure first off? Doing self-analysis instead of so what is the correct procedure? First off, you need to shift your focus rather than focus exclusively on market analysis. Devote more attention to self-analysis. I guess that's what we are doing now. We are learning more about it because this is trading psychology. So devote more attention to self-analysis. Emotional stability as well as the knowledge of your personal strengths and weaknesses may offer significantly higher potential returns than crushing the numbers. Okay, in practice, there will always be more profitable strategies than profitable traders. In practice, there will always be more profitable strategies than profitable traders. Do we get what that place is saying? Do I even get it? Like in practice. Okay. This place is stating it for a fact that there will always be more profitable strategies than profitable traders. More profitable strategies than profitable traders. So there will always be more profitable strategies because new strategies are coming out day by day. Bro, day by day, new strategies are coming. So, but profitable traders are scarce, bro. Let me assure you, you need mental strength to implement your own strategy consistently. Mental strength. I believe we are getting there. Always based on your own predefined rules, in other words. Whew. Tip: self-analysis requires the willingness to engage in some introspection, looking from within. You need to learn how to recognize your thoughts and behavior patterns, as well as your emotional patterns, early enough for it to be useful. Write down all anomalies immediately because memory can deceive you after some time has passed. I guess what this place is throwing to our face is journaling. Personally, I hate journaling. Not that I don't like writing, and I like journaling. And each time I journal, I kind of enjoy it, and I receive some insights and some things that I try to put down are not even there. Hmm. Even yesterday, something I tried to journal yesterday because there is this idea that was popping through my head, and I was using my head. Normally, I use my head. I think and think and think it through. But immediately I began to write things down. I was finding it difficult because I already know the end of the something. But there is something that remains clear, that becomes clear to me, and that is after I've written everything down, then the idea dropped in. And I discovered it, and it was so massive, and it would have contributed massively. And I even know that from onset, it would have contributed massively to my success rate. And it jumped in yesterday. And I've been so happy since that yesterday. More happy. I'm always happy, but at the same time, the joy increased. So because memory can deceive you after some time has passed. Mm. I guess we should take that level again. Tip: self-analysis requires the willingness to engage in some introspection. You need to learn how to recognize your thoughts and behavior patterns as well as your emotional patterns early enough for it to be useful. Write down all anomalies immediately because memory can deceive you after some time has passed. Okay, I guess I'm going to kind of like do more of journaling. I guess I'm going to do more and more. I'm journaling, though I don't like it because most times when I think to solution. Once I know what I'm supposed to do from there, I just move on. I'm inculcating the habit of writing down my thoughts these days. But it's not fully into me yet. But I guess I'm going to be doing more of it now. Remember, experience has taught me to write down patterns of any kind in a trading journal. The moment I notice them, I strongly suggest that you do the same. Okay? I guess we're going to be keeping our journal with us almost always. Otherwise, you give your ego time to correct unpleasant truths as it sees fit. Okay, so our ego might be the one to be concluding that. At the end of the day, you can evaluate the entries in peace and reflect on them. See chapter 5 for more about trading journals. Okay, we'll get there. Such reflection often leads to some useful insights, such as the ability to identify harmful patterns and their impact on profitability. Recognize useful patterns that you were not even aware of. Adopting the position of a neural observer who is only documenting facts. Adopting the position of a neural observer who is only documenting facts can be the best way to recognize your own strengths and weaknesses. That is the prerequisite for positive change and further development. Okay, in chapter 3, I go into detail about the various forms of pattern recognition. We'll get there. Remember, the inability or in some cases the unwillingness to be introspective is a reason that many traders stagnate from the beginning and then give up after some time. Almost every trader has problem patterns. The art is to recognize this pattern and break through them. Okay, we'll get there. We are here to work on ourselves anyway, and our work is going to be successful. Let us first. So we'll get there. We'll get there. So with the right mindset, you can turn every trading day into a positive experience. So either we lose or win, we can turn it into a positive experience. We can prevent loss days, and you are likely to make money on the stock exchange every day. It is therefore important that you refuse to identify with the losses, or you will end up feeling like a loser. Personally, I consider losses as part of the business, and even the way I use my own strategy, I only need to win 3 out of 10. If I win three, I end up with 20% gain. I'm okay with that 20% gain, and that's all. So. So if you focus on your strengths, implement your trading plans according to the rules, and limit your losses at the early stage, there is no reason to doubt yourself. Just continue to learn and develop your strategies. I guess okay, we're on this now. If we focus on our strengths and implement our trading plans according to the rules and limit our losses at early stage, there is no reason for to doubt ourselves. Just continue to learn and develop our strategies. Okay, remember, observe your own behaviors carefully. Ask the right questions. Work on your trader personality and develop mental strength rather than look for only great. Okay, instead of looking for only great, we should develop mental strength rather than look for only great. So learning from experience, small steps, big impacts. Okay, there is a quote that I learned recently, which is when you do something slow, it will be smooth. And if it is smooth, then it is fast. Because you don't have to come back there and do it again. So learning from experience, small steps, big impacts. So as most everyone knows, no one can predict the future. And that's true. Because if there is anybody that can predict the future, then at least betting companies should at least be out of business. Because everybody will be going to them to the something to ask who is winning, who is losing. And if you have 3 wins, if you know the future and you know who is winning, just need even if it is two or with better odd, you'll be rich every day because you can just roll it over and compound it, and before you know it, so as most everyone knows, no one can predict the future. You can only be prepared. You can only be prepared for certain likely developments. As a result of your thorough preparation, you can only be prepared for certain likely developments. And that's for a fact. We can't predict the future. We can only be prepared for certain likely developments. As most everyone knows, no one can predict the future. We can only be prepared for certain likely developments. We can only be prepared for certain likely developments. As a result of our thorough preparation, as a result of our thorough preparation, as a result of your thorough preparation, you are sure to regularly make good and rational decisions. Okay. depending on how thorough we prepare. Then we are sure to regularly make good and rational decisions. Decisions that, despite their goodness and rationality, decisions that, despite their goodness and rationality, will turn out to be completely wrong. The best model don't protect against wrong decisions. Do we get that one? As a result of your thorough preparation, you are sure to regularly make good and rational decisions. Decisions that, despite their goodness and rationality, will turn out to be completely wrong. The best model don't protect against wrong decision because we can never predict the future. So that's one thing for us to learn from them. According to a well-known trader adage, if you set out to be smarter than the market, then you have already lost. Hmm. So the trader who can realistically assess their ability, however, still stand a chance. So that means we have to be a trader who can realistically assess our abilities. However, that's best way for us to stand a chance in this market. Remember, the market holds up a mirror to you every single day. This may disrupt your self-image, but the market doesn't care, of which it doesn't care. Market doesn't care. The market immediately punishes personal weaknesses, emotional reactions, and lack of preparation. Okay. Whew, this is serious. Or it is the game we are playing anyway. So it is a mental challenge to design your development as a trader in such a way that all your trading experiences, whether good or bad, take you to the next level. It is a mental challenge to design your development as a trader in such a way that all your trading experiences, whether good or bad, take you to the next level. Okay. So you will know you are on the right track when you manage not to take personally any errors or setbacks, but rather to constructively analyze such errors and setbacks and from them, draw the right conclusion from them. However, blaming yourself isn't constructive. It leads to you focusing on your weaknesses rather than your strengths and can leave you feeling incompetent and cause your self-confidence to suffer. For tips on how to build your self-confidence, okay, that's chapter 6, we'll get it. So, you are not to be blaming yourself. Anything can happen. The best of best still lose in this market. So a good way to strengthen your self-confidence is to think in small steps. A good way to strengthen your self-confidence is to think in small steps. Many experienced traders report that setting many a good way to strengthen your self-confidence is to think in small steps. Okay. Many experienced traders report that setting many small achievable goals has proven to be a tremendous help. Two strategies make sense here. Number one, time frame, set daily, weekly, and monthly goals. Okay. Number two, process level. Set task-oriented goals associated with implementation strategies, trading setups, trading plans. Okay. Tip. If you decide to keep a trading journal, see chapter 5, expand your focus beyond your weaknesses and errors. Watch out for balance. Successful setups and successful trades are worth entering. Always pay attention to which mirror you want to look at, either the good side or the weaknesses and error side. Okay. Remember, set yourself some sub goals as well. The resulting step by step approach, which is immensely motivating, creates regular experiences of success. Psychologists say that this is the breeding ground for mental strength and self-confidence. Studies show that achieving small planned successes has a greater impact than the normal. Psychologists say that this is the breeding ground for mental strength and self-confidence. Studies show that achieving small planned successes has a greater impact than the normal positive experiences someone has in everyday trading life and the normal positive experiences. Avoiding trading stress traps. Okay, how do we? Because you are risking your own capital when you trade, it is impossible to avoid psychological prayer. You are acting in an environment of risk and uncertainty, and you will regularly suffer losses. This can cause an immense amount of stress. Okay, stress you will somehow have to deal with. That task isn't always pleasant. Let's take that again. Avoiding trading traps. Because you are risking your own capital when trading. When you trade, it is impossible to avoid psychological prayer because you are trading our money. It is not possible for us to avoid psychological prayer. We always feel it one way or the other. You are acting in an environment of risk and uncertainty, and you will regularly suffer losses. This can cause an immense amount of stress. Stress you will somehow have to deal with. You have to deal with those stress. That task isn't always pleasant. Be honest with yourself. If you are looking for a stress-free environment, trading is the wrong place for you. Hmm. If that task isn't, be honest with yourself. We have to be honest with ourselves. If we are looking for a stress-free environment, trading is the wrong place for us. So if you don't want stress, don't like stress. Whew, trading is wrong place. Mm, that's big word. Working with positive stress. Stress isn't generally detrimental to your health. It is quite a natural response to perceived stressful situation. Those times you feel under pressure, in other words. Okay? Stress sharpens the senses and inspires performance. You can cope better with challenges. The output of the stress hormone adrenaline provides for increased attentiveness and muscle tension. Positive stress mobilizes the body and mind without causing damage. From an evolutionary point of view, a minimum level of stress and excitement is necessary for survival. Okay, what we hope. So remember, winning is a rush. It triggers a shot of adrenaline in all trader and puts them in a joyful, excited state. Winning is sure to motivate you and increase tremendously. Winning is sure to motivate you and increase tremendously your willingness to perform. So willing is a rush. It triggers a shot of adrenaline in all traders and puts them in a joyful, excited state. Winning is sure to motivate you and increase tremendously our willingness to perform. Subtopic: stress and fear of loss of control. Stress and fear of loss of control. That adrenaline rush can definitely be positive, but it can also be dangerous. If the feeling of stress continues and turns into a fear of losing control, negative stress can easily throw you off track. If the psychological strain of trading becomes overpowering, you will lose your emotional balance and make mistakes. Remember, in research, a distinction is made between two types or stress? Positive stress. How we go? So stress and fear of loss of control. The that adrenaline rush can definitely be positive, but it can also be dangerous if that feeling of stress continues to turn into a fear of losing control. Negative stress can easily throw you off track. Okay, so we're learning from here that if we are feeling some negative stress, it can throw us off track, and I believe we do feel this oftentimes. So if the psychological strain of trading becomes overpowering, you will lose your emotional balance and make mistakes. Okay. So remember, in research, a distinction is made between two types of stress. Positive stress, known as eustress, and negative stress, known as distress. I guess I'm hearing this eustress for the first time. So it is a positive stress. Positive stress occurs when you are highly motivated. Wow. Okay. Successful moments works to drive you. Okay. Negative stress occur as a result of frequent overtaxing and threatening situations over a longer period. The physical and psychological consequences of negative stress are sometimes so serious that they can lead to burnout syndrome. Wow, a very serious something. So stress is a social phenomenon. According to survey, an overwhelmingly major of the workforce suffers from stress symptoms. You can probably imagine that trading contains numerous stress triggers. After all, you are risking your own money in an unprecedented market environment. If this isn't fertile ground for negative emotions and stress factor stressors, what is? One, the need to be in control in trading, the desperate need to get a grip on the market, in other words, the need to be in control in trading may emerge when you have lost control in other areas of life. Wow. So the sense of powerlessness triggers negative stress. Subconsciously, you want to compensate for this loss of control. However, the market are the worst place to do it. So this is invariably telling us that if we don't get our life in order, we shouldn't come near trading. So there are a lot of stresses that is going to is a stress factor, and this is serious. So letting go of false belief. Sometimes you may put pressure on yourself with false expectation and unrealistic ideas of trading. Okay, you have probably never consciously thought about it. Typical stress triggers are, for example, the following convictions I often hear in my practice. So only a day with wins is a good trading day. Ah, do I believe that? No. I must trade a lot to be successful. Okay, disagree with that also because, okay, let's go. I must earn money with trading every day or week. So these are the three statements that he said. Yes, and a lot of these statements are what people say, trading what, and most beginners believe in these three statements. So they believe that only a day with wins is a good trading day. I must trade a lot to be successful, and I must earn money with trading every day or week. And this is kind of what we believe also when we started out. So these beliefs inevitably lead to negative stress because these are the expectations. So automatically these beliefs are going to lead to negative stress because they are not real. So you are emotionally dependent on winning this. To feel good, you are dependent on it emotionally. So if you believe that you need to earn money on the stock exchange, the market will take your self-esteem for a ride. Any unexpected market volatility inevitably causes a roller coaster of emotions. It is well known that the loss of control leads to stress and anxiety. How will you be able to focus on the good complaint implication of your trading strategy under those circumstances? There is no way. So you can control neither neither the market nor your trading results. You cannot control any of these two things. You cannot control the market and your trading results, which are your rewards, your expected. You can't control them. You have to have a flexible expectation from markets. You have to have a very flexible expectation from markets. Okay. So a good day is a day in which you successfully implement your strategy. A good day is, yes, a determinant of a good trade, like it is stated in my trading plan, my mantra, that a successful trade is the one where you follow your methodology. So a good trade is a day in which you successfully implement your strategy. So that's a good day. Either you win or lose, it's none of your business. But once the determinant of a good day is whether you implement your strategy. Some days will bring wins and some will bring losses. The number of trades doesn't determine your success. The number of trades, the number of trades that you take doesn't determine your success either. In fact, it is sometimes better to wait. Let's take that again from the beginning. You can control neither the markets nor your trading results. A good day is a day in which you successfully implement your strategy. Some days will bring wins and some will bring losses, which is normal. The number of trades doesn't determine your success either. The number of trades doesn't determine your success either. In fact, it is sometimes better to wait and observe the market until appropriate trading signals appear. In fact, it is sometimes better to wait and observe the market until appropriate trading signals appear. And that's for a fact. So in fact, it is sometimes better to wait and observe the markets until trading signals appear. You are unnecessarily putting pressure on yourself if you think you need to trade frequently. You are bound to make mistakes. Don't let markets decide how you feel. I guess we're going to take that for us to be able to get the fact that we're trying to observe from that point. So let's take that paragraph again. You can control neither the market nor your trading results. A good day is a day in which you successfully implement your strategy. Some days will bring wins and some will bring losses. The number of trades doesn't determine your success either. In fact, it is sometimes better to wait and observe the market until appropriate trading signals appear, which is a fact. In fact, it is sometimes better to wait and observe the market until appropriate trading signals appear. You are unnecessarily putting pressure on yourself if you think you need to trade frequently. You are unnecessarily putting pressure on yourself if you think you need to trade frequently. And you are bound to make mistakes. Don't let the market decide how you feel. Either you win or you lose. You don't let market decide how you feel. That's a very big lesson. Remember, mental strength also means being patient. Mental stress, mental strength also means being patient. Patience is a virtue that isn't easy for traders to develop. Being patient means waiting and trusting that what you forecast will occur. It requires self-discipline and courage to endure the uncertainty. However, the market develops. It requires self-discipline and courage to endure the uncertainty. However, the market develops. Patience requires a firm belief that your strategy is the right one and that the appropriate entry signal will come when you develop mental strength. you will be in position to surpass yourself. And this mental strength is being patient. And like here, we are made to understand that it requires self discipline and courage. It requires self discipline and courage to endure the uncertainty, however, the market develops. Like I said, the major purpose of this is to number one, this book is serving as a mirror for us to look ourselves through, to see what we are doing right and what we are not doing right. So if we are doing something right, we easily just know that okay, this thing we are already doing it. And when it points it and it points out something to us that we are not doing right, then our something is to quickly and adjust, accept it and move, imbibe it into our psyche and run with it. A tip for us, be aware of your assumptions and expectations by writing down your beliefs. Consider carefully how realistic your goals are and be clear about what is actually important in trading in order to be successful. Consider carefully how realistic your goals are and be clear about what is actually important in trading in order to be successful. Reducing stress in a targeted manner. Okay, here's the burning question. How can you relieve stress in trading? Okay, how can we relieve stress in trading? The usual stress management method mostly aim at symptoms and their results. Yeah. And personally, I like dealing with issues from their roots. So, the sustainable form stress management. The usual stress management method mostly aim at symptoms and their results. This isn't enough. A sustainable form of stress management goes deeper and explores the reason and causes. A sustainable form of stress management goes deeper and explores the reasons and causes. Yes, and that is wisdom. The goal is prevention instead of having to come up with a cure. So we want to prevent it from the source. Okay, let's move forward. The following, Jesus Christ. Oof. The following recommendations are derived from the flood of psychological self-help books on the topic of holistic stress management strategies. Let's start with the short term measures. Take a break from trading and try to relax. Why? Release the mental tension by physically reacting to it. Release the mental tension by physically reacting, maybe by letting loose a primer scream or two, pounding the table or running around the block. Consciously distract yourself by concentrating on a completely different topic. Okay, now for some long-term measures, identify your stressors. Consciously avoid stressors by preventively correcting and adapting your trading. Change your attitude to the stressors you can't change. Okay. The short-term stress management measures are easier to implement than the long-term ones. To set the long-term measures in motion, you need regular phases of regeneration when it comes to your trading. Okay, so remember, the truth is you can't change most of the stress factors in trading, but you can preempt this and control your stress response more consciously by recognizing those triggers earlier on and assessing them more positively. This requires personal self-reflection. When you can consciously perceive your triggers, you can control your response. Okay. If you use this window of opportunity effectively, you can break old stimulus response patterns. That's how you can avoid stress traps. Stress trap. Okay, this paragraph is just letting us to understand the fact that we cannot control our we can't change much of the stress factors in trading. They are constant. It's always there and it's always going to be there. But we can control our response to it more consciously. So we just have to recognize the trigger early on and assess them more positively. So technical stuff. The Australian neurologist and psychiatrist Viktor Frank, 1905 to 1997, once stated, there is a space between stimulus and response. There is a space between stimulus, what stimulates us, and response. This space gives us the freedom and power to choose our response. Our growth and our freedom lies in our response. Okay? So when something happens which serves the stimulus and the way we respond to it, there's a space between it. So and we have the freedom and power to choose our response. In other words, it is up to us humans whether and how we respond. How you react is a mirror of your trading development. Stress responses start in your head. The thing you need to change is how you think. So that's what we need to change, how we think. It is possible for you to learn how to stop automated reaction patterns before they start. It is up to you to decide which response is appropriate in a given situation. It is up to you to decide which response is appropriate in a given situation. Use your response space consciously and actively. Use your response space consciously and actively. As a result, you can maintain control. Use your response space consciously and actively. That space that is between the stimulus and response. You should use that space consciously and actively. As a result, you can maintain control with the right attitude. You can develop your personal trading development potential. You can also gain mental strength and resilience. Okay, so the tip for us here is traders often follow way too many markets on too many screens. That's those who does that. Oh, I don't do that. I only focus on one trading market, which is zero USD. And that practice is strenuous and distracting. The result sensory overload can cause stress. Stay focused and concentrate on the essentials. That way, you can stay on top of everything. The flood of information usually provides no added value. Anyway, also make sure you have a stress-free trading environment. It is important that you can work undisturbed in a focused manner. Avoid unnecessary distractions. Oof, my major distraction is business anyway. So, but still the business and sustaining us has given us uh, the balanced life needed to be able to be successful in trading. So we can try out a variety of relaxation exercises to relieve stress. Yoga, meditation, autogenic training, or progressive muscle relaxation, for example. Special breathing techniques can also calm the nerves. Regular exercise reduces stress hormones and pent-up energy and has been proven to make people more stress resistant. You can find out more about the benefit of exercise and other relaxation techniques in chapter 6. We get there. Becoming more resilient. Each trader responds differently to stress factors. Each trader responds differently to stress factors. Personality traits have an effect. Okay. Obviously, as confirmed by resilience research, those some initially respond to stress by acting powerless and helpless. Okay. Others immediately respond to the challenges and overcome any crisis. The crucial difference is this: traders with resilience respond a lot faster. They have a healthy sense of self-confidence and don't perceive uncertainty or pressure as stress, and they don't take trades personally. Psychology understands resilience as mental resilience, the ability to cope with stress, crisis, or setback and grow from them. In other words, resilient people have a realistic picture of what's going on around them. and their ability to deal with events and occurrences that get thrown their way. They are happy to take their fate into their hands. This positive assessment style, known as PASS for short BAS, ensure that someone can still act appropriately and make decisions under difficult circumstances. Okay. A person's own assessment of stressful situation naturally plays a big role. It is a question of character strength, whether someone can continue powering through rather than getting stuck at a low point. See, if you tend to take losses personally, okay, make sure your mental resilience remains in harmony with your emotional risk tolerance. When choosing the position size of your choice, the dollar amount you invest in one food, in other words, always ask how you will feel if you get stopped out for a loss. Answering this question determines the amount of risk you are willing to take. Now that's true. We have to answer that questions almost always before we enter any trade. And answering that question, you can just simply ask the question out loud. And if you ask the question out loud, it's kind of it will kind of give you yeah the kind of emotional response you receive from your body. We are putting $100. How will you feel if you lose that $100? How will you feel if you lose $200? How will you feel if you will know or you will notice that by me answering that question, what you're going to get from it, is going to kind of. So, what makes for a resilient trader? A truly resilient trader can control themselves so that they maintain an overview and can implement suitable strategies for stress management. This isn't static condition. Can control themselves so that they maintain an overview and can implement suitable strategies for stress management. Yeah. So what makes for a resilient trader? A truly resilient trader can control themselves so that they maintain an overview and can implement suitable strategies for stress management. This isn't a static condition. It is a dynamic process. Markets are constantly changing. What makes a resilient trader? A truly resilient trader can control themselves so that they maintain an overview and can implement suitable strategies for stress management. They control themselves so that they can maintain an overview and can implement suitable stress strategies for stress management. This isn't a static condition. It is a dynamic process. Okay. Markets are constantly changing and mentally resilient traders can better cope with changes. Okay. They can, for example, survive a losing streak without feeling like a loser. That's true. We've been there and we've come out of it. A streak that might make others lose their emotional balance. Okay, technical stuff. Brain researchers assume that the activation of stress and fear centers in the brain of resilient people can be inhibited to such an extent that such individuals can respond with a controlled reaction. Remember, traders are not naturally resilient by nature. It is a predisposition that presupposes certain personality traits and can be initiated and strengthened by way of targeted training, which means resilience doesn't just come naturally to us as human beings, but with time, with practice, with repetition, we can become more and more resilient. So seeing what constitutes a resilient trader, let's see what constitutes a resilient trader. Here are some important traits and competencies of mental resilient traders. Being solution and goal oriented, self-control. These are the things that constitute resilient traders. Like I said, when we read books, it is a mirror we are holding in our head, showing us things we are doing correctly and things we are not doing currently. Things we are doing currently, we just continue. It's already there, so we just continue doing it. Things that are not good, that we are not doing currently, start doing it. And, either we are reading for information or reading to learn. If you are reading to learn, you learn what you haven't learned before and you apply immediately. But if you are reading to learn, if you are reading for information, the information you are not aware of, you learn and you learn from it. You will read the information, so that way continue. So things that constitutes a resilient trader: being solution and goal oriented, self control, accepting what comes your way and remaining calm, self awareness, fostering personal responsibility and control, sense of responsibility. Okay, being realistically optimistic and having a positive self image, self efficacy. These properties, the resilience factor, the resilience factors serve to protect you when adversity strikes, and they mutually reinforce each other. They act preventively, which is how they protect you against stress. Stress traps when dealing with market. Quickly want to join us something. So what does this mean in practice? It means that resilient traders practice non-attachment by not identifying with losing trades. Think of the teachings of Bhutana Buddha here. Dissociate the outcome of a single trade from your self-esteem as a trader. Manage to cope better with difficult market conditions. Avoid perceiving market as threatening. Act in a considered and controlled manner. Maintain emotional distance. Think non-attachment again when monitoring. Maintain emotional distance when monitoring trades. When monitoring markets, think non-attachment again. Find appropriate coping strategies and trust these strategies will be successful. And trust this strategy. Find appropriate coping strategies and trust these strategies will be successful. One, self-confidence in trading can easily lead to overconfidence. When it comes to markets, believing that you and you alone have control over your destiny quickly becomes an illusion of control. Okay. When it comes to market, believing that you and you alone have control over your destiny quickly become an illusion of control. The reality is you have to influence whatsoever market. The reality is you have no influence whatsoever on market perception. Personality traits and characteristics remain largely stable throughout life, even if more recent research has come to the conclusion that the human personality is more changeable than previously assumed. Okay, let's take that again. Personality traits and characteristics remain largely stable throughout life, even if more recent research has come to the conclusion that the human personality is more changeable than previously assumed. This doesn't apply to the age group of 30 to 60 years old, which is where most traders will find themselves. I don't get that level very well or clearly. Personality traits and characteristics remain largely stable throughout life. Throughout life. Okay. Our traits characteristics remain largely stable throughout life. Even if more recent research has come to the conclusion that the human personality is more changeable than previously assumed. This doesn't apply to the age group of 30 to 60-year-olds, which is where most traders will find themselves. And none of this means that you can't train yourself in ways that increase your resilience. Resilience is a dynamic process. With the right challenge, humans are definitely capable of becoming more resilient. Take a look at Dr. Eva Short's Resilience for Dummies in order to learn more about psychological resilience and inner strength. Your trader personality influences your trader personality influences how you perceive and assess what is happening and the market. Personality, your trader personality influences how you perceive and assess what is happening on the markets. You also need to factor in your personal experiences of the stock markets. When you assess these two aspects together, it explains why traders with different personality and different experiences have such varying experiences when it comes to markets. Starting your training regimen. Scenario analysis are a useful method for training mental resilience. Each time you execute a trade, imagine how you might react if the completely unexpected occur. Worst case scenario, the market turns suddenly against you and you are repeatedly stopped out in the shortest time with accumulating losses, or a large price gap when the market open forces the trade of a security you had overnight, leading to an unexpectedly heavy loss. Best case scenario, your timing is perfect and you hit a winning streak, or you unexpectedly profit from a large price gap when the markets fall from. The psychological trick is to truly imagine your emotional state for both cases in advance. Okay? The psychological trick is to truly imagine your emotional state for both cases in advance. If you can imagine both cases in detail, you can already think think through what your next step should be. Admittedly, this strategy requires a goodly amount of empathy to stimulate strong emotions, such as anger and resentment on one hand, and guilt and euphoria on the other, but it's worth it. The main benefit here is that it takes away the power of these two emotions in real life situation. You have played through the emotions of the scenario. You are therefore prepared, meaning it's much harder to knock you off balance, and you have managed to write a script about how you will react before the event occurs. While still in a calm state, is a good method for increasing your resilience and trading. Remember, traders often say that setbacks have made them more resilient. Resilience research traders often say that setbacks have made them more resilient. Resilience research confirms this observation. People who experience many setbacks and recover from them, you know that thing will that that things always pick up again. In my experience, you cannot completely avoid errors and losses in trading. If you have gained the inner conviction that you will be able to weather any setbacks that come your way, you have the required emotional resilience for trading. I believe I do have that because we faced a lot, no matter what. But this is the only way. This is the only way that I know, bro. This is my only way. This is my only way. And you die here, bro. We are either successful or successful. Yeah, no matter what, whatever it takes, we give it to it. But I know most times it's going to we are the one that will change the most, of which I'm willing and ready to change. Which reality do you have today? Which reality do we have today? In trading, you see now and then a wide gulf between reality and perception. The map is not the territory. The map is not the territory. It's one of the main assumptions of the neuro-linguistic program environment. The theory isn't what it describes, and a model of reality is not reality itself. It's just a model. Are different ways of saying the same thing. Okay. A map, the territory distinction defines the relationship between objective reality and your own subjective perception of the world. Each trader creates a mental representation of the markets. On the basis of each trader's own filtered sense impression, the brain creates internal map and determines what someone perceives. Typical filter are usually experiences, beliefs, attitudes, values, and assumptions. In other words, every trader constructs their own reality and their unique model of the market. The selective filter we traders use to perceive the market determines how we trade. Only by changing your language, namely describing your internal map, can you change your perception of the outside world. With positive beliefs and a self-aware attitude, you will adapt your map of the reward. You will undertake a re-evaluation in your head and thus create new perspective. The brain doesn't distinguish between the actual events and the visualized and desired effects. The biochemical processes are identical. Body and soul are aligned with the desired destination. They create a new reality. Okay. Successful trading requires mental strength. So successful trading requires mental strength and mental resilience. Resilience is a competency that you can learn and develop. Okay. Nowadays, you can find a multitude of training methods for increasing resilience. The exercises are primarily based on methods of behavioral psychology, positive psychology, and a neuro-linguistic program. I explore some of these methods in the next few sections. The journey is the destination. Hmm. And this is my mantra. But this gives me a word statement for it. The journey is the destination. There is no destination anywhere. It is through the journey. The journey that we are on that is still the destination. So the secret to goal setting is to boost your goals with positive emotions and energy. That way the goals becomes which is you absolutely want to achieve. You won't become a better trader just because you think it might be nice to do one. You need this yanny feeling in your bones compelling you to chase all your goals in a highly motivated way. No matter the consequences, goals should always be formulated positively and build on your strength. So regardless of your expectations and the reward you are anticipating in the market. Goals should always be formulated positively and build on your strength. Think about what you did best over the course of your most recent trading days. Is there a plan that shows specific abilities or strengths? Can you derive a specific goal from this? Think about what you did best over the course of your most recent trading days. Is there a pattern that shows specific abilities or strengths? Can you derive a specific goal from this? Allow your competencies to become visible so that you can use them to drive your progress. Okay? Remember, realistic and achievable goals are the foundation of success. Goals you have achieved create self-confidence and motivation. So, what is the determinative factor when it comes to success? Here is that your decisive here is that your goals should aim to improve the trading process rather than focus on boosting your profits. Why? So what's the determinative factor when it comes to your success? Okay. Decisive here is that your goals should aim to improve the trading process rather than focus on boosting the profits. Okay, instead of boosting profits, we just have to improve our trading process rather than why. It is very simple. You can design and control. It is very simple. You can design and control process flows, but you can't control the achievement of profit targets. Too many incalculable factors beyond your sphere of influence determine your profit. Focus on what you can control. Those are your processes. What you can control, your strategy, your risk management, your psychology, your experiences. Focus on those. Those are your core processes. The implementation of your trading plans and your strategies, just like I said. Example, do you want to improve the timing of your trade entry plans? Simply adjust your setups and select an entry with half of the planned position size, and then buy the other half after a predefined time. Depending on how the price moves, you will have either lowered your leverage, your average purchase price, or doubled your position on profits. Your focus should always be on the continuous improvement of your trading strategies. Your focus should always be on the continuous improvement of your trading strategies. Your focus should be always on continuous improvement of your trading strategies. Each experience brings you one step further. The learning process is the part that leads to your growth. A good strategy implemented according to the rules is automatically profitable over time. The focus should always be on the continuous improvement of your trading strategies. Each experience brings you a step further. The learning process is the path that leads you to your goal. A good strategy implemented according to the rules is automatically profitable over time. Strategies for building resilience. A few years ago, the website for the American Psychological Association posted a guide to strengthening resilience. The guide entitled The Road to Resilience presented these tips. Number one, accept that change is part of living. It's a part of living. Okay. Avoid seeing crises as insurmountable problems. So crisis is it's a surmountable problem. Nurture a positive view of yourself. Take these decisive actions. Move toward your goals. Maintain a hopeful outlook. Move toward your goals. Maintain a hopeful outlook. Always be hopeful when you are looking at something. Take care of yourself. Keep things in perspective. Look for opportunities for self-discovery. Make social connection. So these are all the steps. These are the roads to resilience. And accept that change is part of life. It's part of life. Avoid seeing crisis and seeing some little problem. Nurture a positive view of yourself. Take decisive actions. Move toward your goals. Maintain a hopeful outlook. Take care of yourself. Keep things in perspective. Look for opportunities for self-discovery. Make social connections. So we have to make social connections. Remember, every trading day turns into a positive learning experience if you focus on your strengths and consistently implement your trading plans. It is not about making a profit every day. That is unrealistic. It is about optimizing processes and strengthening your confidence in your competencies. Subtopic, accepting emotions as a source of information. Hmm. So the way we feel is an information from what is happening within our system. Hmm. Accepting emotions as a part, as a source of information. And I guess this is a very good something. So, emotions are the formative parts of your personality and character. They determine how you perceive the world. Can you exert any influence on your perception of the market and how you react emotionally? Okay. I am here to tell you that you surely can. Admittedly, you can change the core of your personality. Your character traits will remain broadly stable for the rest of your life, but you can learn and in what form your emotional personality comes to the fore. Neuroscientific experiments with brain damage the subjects. Okay. Neuroscientific experiments with brain damage test subjects have proven that humans are unable to make decisions or act without emotions. So, as paradoxical as it sounds, if someone has lost access to their own memory of past emotional experiences, they no longer have a rational strategy for action. Traders get tangled up weighing all the options, leading to an infinite loop. Brain researchers says that human lack freedom of will at a conscious, rational level. Who else remembers Mr. Spock? Mr. Spock, the emotionless Vulcan from the Starship Enterprise, who always acted irrationally. It is a pipe dream, as everyone knows today. It is impossible to use the mind to get a grip on emotion, and it is most certainly impossible to suppress them. In fact, it works the other way around. When you become angry about losses or errors, when you become angry about losses or errors, when you become angry about losses or errors, lightning fast chemical processes occur in your brain that doesn't give reason the chance. The adrenaline boost, depending on someone's temperament, favors the kind of outburst that might lead to the destruction of quite a few keyboards and monitors. Uh, So it is impossible to use the mind to get a bit of information. It's most certainly impossible to suppress them. In fact, it works the other way around. When you become angry about losses or error, so lightning fast chemical processes occur in your brain that doesn't give reason a chance. As long as your emotional state is at equilibrium, as long as your emotional state is at equilibrium, you have full access to your logical and analytical mind. The state of equilibrium is the key to your cognitive performance. How can you manage to maintain this condition while drinking? The decisive step is not to try to suppress or block out emotions, but rather to consciously observe and accept them as valuable information you can use to inform your trading. Are your emotions telling you that you need to adjust your trading strategies? How can you manage to maintain this condition while trading? This decisive step is not to try to suppress or block out emotions, but rather to consciously observe and accept them as valuable information you can use to inform your trading. Are your emotions telling you that you need to adjust your trading strategy? To accept your moods. Take away the hold that negative emotions have on you, and you won't lose control so fast. By consciously perceiving your subliminal feelings, you can achieve a change of perspective and take more constructive forms of Psychological studies confirm that it is helpful to speak about your own emotions or to write about your emotions in a journal. In this way, you can observe your behavior from an observer perspective and reevaluate it. Okay, so the way we feel, how we feel about this. Use your own emotional reaction as important additional information. Use your own emotional reactions as important additional information. You can use in trading much of the implicit knowledge in your emotional world. The rational mind has no access to the emotional treasure that lies hidden in your subconscious mind. This treasure has immense significance. Brain researchers have concluded that the area in human memory devoted to preserving emotional experiences is many times larger than all other areas of memory storage combined. Yeah. Your intuition or your gut feeling sometimes produces valuable information, results that cannot be achieved by rational knowledge. Amen. You can find out more about this sixth sense. Chapter 3. Say hello to Mr. Limbic system. Okay. Is it all in your head? It depends on which part of the head you are talking about. Reasoning certainly isn't the highest authority, even if it sits in the uppermost part of the brain. Behind all that reasoning power is much a older brain area that can override and turn off reasoning at any moment. It is the limbic system, your emotional control center, composed of a variety of network structure. As most people know, decisions are usually made in the background, and the human brain is no exception. Emotional memories are stored in the area of the limbic system, co-controlling both vegetative and psychological patterns. Information coming from outside is always accessed by and filtered through the limbic system first. This information is compared with previous life and learning experiences, and only then is passed on to the higher order brain functions. Only a small fraction of the masses of information you consciously perceive through your senses arrive in this upper chamber. Brain researchers have demonstrated that the limbic system of the brain is also the emotional control center. It is also way ahead of the intellectual areas, which it comes to decisive action. When it comes to decisive action. In fact, if the emotional center are overactivated, access to the cognitive areas is severed. Meaning, in fact, if the emotional centers are overactivated, it means access to the cognitive area is severed, meaning that the much data to prefrontal cortex, the seat of all complex or cognitive behavior, is supplied with less oxygen and glucose. The person then acts impulsively and without reflection, whether it is greed or euphoria or fear or panic, hijacking the thinking and condition and actions. Both areas of the brain are involuntarily on autopilot and act aimlessly. The rational mind is being switched off. Okay, yes, if we are aware of this pattern, then be able to take grip of what is happening within us. Something. So, an inexplicable internal grief, a grumbling in the belly. a tense neck, and prayer in the chest are often cited as physical warning signs that have saved many traders from making a bad decision. Even experienced traders react emotionally from time to time, but they never let emotions take control. They stay disciplined and stick to the rules. You can learn about maintaining emotional equilibrium in chapter 7 and 8. You can't lock away your emotions in a deep, dark direction when you trade. The best strategy for dealing with your emotions is to consciously perceive, accept, understand, and where appropriate, take them into consideration. Guess we are in part two now, which is making a successful trade. Okay, we've come to the end of part one. Yeah, and the end of chapter two. I guess we're going to be stopping here. It's quite close to 2 hours. But this is good, and I really like it. So I guess we've learned, and if there is anything we learn about our brain, we learn about our emotions, and the way we can, yes, emotion is the signal for information, and we've learned about being resilient in the market, resilience. So that being said, we'll continue from here tomorrow. Thank you very much, and I believe we learned something that will take our trading to the next level. Thank you very much. Have a lovely and a profitable progress also.